In this video, you'll be learning about this topic.
So talk to us about the banking. Your opinion is that Bitcoin's going to continue to run probably more aggressively than what the 100% we've seen year to date.
Yeah.
What does this do to the banking sector moving forward?
Well, the banking sector is reflecting something else. And it's that theory that everyone's got bored of me talking about, is the insolvencies. Is we have this bifurcated world where NASDAQ stocks were going up, but really everything from oil markets to banking stocks were all doing the opposite. And the old economy names, the triple B credit companies, the most indebted large companies in the world, they all look the same. They basically bounced a bit from the low and then flatlined and then started rolling over, which is actually exactly the same as the real-time economic data. So the European economic data is rolling over and tipping down. Guess what? The European banks are tipping down. So they're reflecting the economy. The bond market looks the same too. So as we said, that cash flow racy business model of SaaS businesses kind of decoupled. Everything else is the same. But banks, if insolvency really is the problem, and how insolvency is a problem is, if I'm right and GDP growth stays negative for the next 12 months, there's not enough cash flow to pay for the debt. Simple as that. Whether it's at household level, foreign corporation level, or US corporate level, small and medium-sized enterprise level. So that creates more insolvencies as companies go insolvent. And what the banks are telling you is there's a problem here. And that's what the bond market's telling you. And that's what General Electric's telling you. That's what AT&T's telling you. They're all saying there's a debt problem here.
So let's say that you're right, Raoul, that Bitcoin is going to take off in 2021. And I'm not saying that I agree or disagree with that statement, but let's say that is true. What does that do for the opportunity cost perspective of fixed income investors? And what if it's not true?
There's a reflexive loop that's going to happen. It's so obvious. Is the US has approved custody of Bitcoin for certain banks, which is a code word for prime broking for hedge funds, which means the hedge funds will see this. Most of them haven't got custody yet, but soon they will. And that means that they will come into this space because they can trade multi-asset class. So that sucks them in. And I've talked about this. The next is the ETF will get launched at some point. Somebody will get it off the ground. And then all the IRAs buy it for their customers because it's outperforming everything and they love to be sheep and chase the trade. So this is going to be the strongest trade now. So you've got the hedge funds and the IRAs. We know the family office space is already interested and they get sucked in the more the price goes up and the narrative goes up and more people talk about it. Family offices tend to do that. Endowment level are next because they can hold it because it's a long-term asset. So endowments can justify it earlier than pension funds can. Pension funds can't do this yet. It's quite difficult for them. So we've got this wall of money that I keep talking about that's coming. And if you throw in the public and the NASDAQ traders and the speculators and the Robin Hooders and everybody else, you've got a perfect storm. And you've got the corporate treasurers.
And I think that last one's huge, Raoul. I mean, Michael Saylor, no offense to Michael and his company, but him dropping 425 million into this, that's a small company in the grand scheme of things globally, right? Like it's not a big company.
Yeah. Unfortunately, I've talked about this a few times recently. The crypto space is not very good at speaking the language of others. We tend to impose our own language. So the corporate treasurers will not buy Michael Saylor's language because it's not the language that they speak. They don't think in those terms. Yeah. Corporate treasurer may stay at Microsoft for 10 years and then leave. He doesn't think in the same, it wasn't his company, he didn't build it. So we need to talk about how it works as a diversified asset, how it works in a corporate treasury portfolio of fixed income, commercial paper, currency baskets, all of the things that they do. We need to talk that language and show them. Once you do that, Microsoft and Apple and all these other massive cash businesses will own it. Of course they will, because it's a great asset for diversification and they don't need to buy too much of it. The pension system, okay, that's another beast. Again, everyone's like, they should do this. Well, until you can show it to them in Barra models. Barra is the model by which most of the pension industry builds their portfolio and risk management tools. But we're not talking that language. So it's like you shouting at me in French and me just shouting back in English louder, saying, I can't understand you. That's what's going on because they can't do anything with this. They've got a bearer asset. They don't know how to custody. That we're not telling them how it works from a portfolio diversification or risk metrics standpoint. So we'll get there. And I've already been starting to beg people who understand the Barra world to say, listen. And now who owns that pension fund asset allocation world? is consultants like Mercer. We need to get them across the line. You need to teach them about it first. Then they go to the pension fund trustees, and then the pension fund trustees approve it for the asset allocators. That's a big process.
And I think the key distinction between what you're talking about across all these different mechanisms of how they could come into the market versus Michael Saylor is it's a story about voting rights. It's a story about control inside the company. He has complete control to just go out and do a bold call of taking his entire treasury and dropping it into Bitcoin like he did.
The brave go first. I mean, good on him, right? Because he was in a position that he could, and he got it. And there's a few other people around that got it. But that will spread slowly, but it will come, because I know everybody's going to hate this, but the investment banks will get into this space, and they know how to translate. They know how to speak to these other people. And that's a net beneficiary to the space, even though all of us want to protect it from the investment banks. But they can't screw with it, really, because it's distributed. It's not owned by them. Nothing they can do with it. They can help create a derivative market around it, but that's coming anyway. There's nothing we can do to stop it because humans want leverage for some reason.
Back in 2017, when this thing was really running, the big issue discussed was whether the governments would shut it down. You almost do not hear that argument anymore. What are your thoughts on that subject?
Yeah, I mean, I've read the IMF papers, the BIS papers, the ECB, the Bank of England, and the Fed, and the Department of Justice, all their papers. Not one of them is saying, we need to stop this. They're all saying, let's make sure it's regulated, make sure the entities are regulated, and by the way, let's build digital currency systems because that's where we have to get to. And they've kind of acknowledged Bitcoin. It's like, yes, look, this was the great invention, and we understand. They've got no reason to stop it because, I mean, the bloody foreign exchange markets trade $4 trillion a day. They don't care about Bitcoin. But what it was really interesting to them and taught them, okay, we need to move into a digital future. And good on them, they're doing it. Now, how they use it in the end, who knows? But I don't think Bitcoin's a problem. Talk to me when it's $10 trillion, and maybe they try. But in a globalized world, with something that moves around on the internet, it's almost possible to stop because somebody will allow it.
But Raoul, when it's at $10 trillion, you have so much entrenchment on corporate balance sheets all over the globe. Like, how in the world are they possibly going to shut it down at 10 trillion?
That's not going to go well with voters. So they're not. It's the fear. They once tried it with gold. Well, last time I checked, gold's been around for about 10,000 years and still works as a system of value and money, regardless that the Fed once banned it. Yeah, Turks banned it recently. Did it stop Turks? It's not a narrative that's provable in the outside world.
So one of the unique things that pops out of this, if we start going down this path, if you want to take out a loan right now and you want a $100,000 loan, you have to pretty much cough up $200,000 worth of Bitcoin and put it into somebody else's escrow account. That's not how loans work today, right? Like, it's very different than that type of system. So when you think about this world we live in today that is so credit-based, and if everything starts moving in this direction where everything's equity-based, what does this do to the landscape of everything?
You know, I don't know the answer to that because I think this is going to be a phased affair. And it looks like this now, but in the end, Bitcoin won't look like this. Its volatility will come down to 5%. But at what price is that? What market cap? 10 trillion, 100 trillion? I don't know. But then it's like money and then it stabilizes massively. So I don't really know how this is all going to work. But it will take time for that to play out.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.